All right, good morning, everyone. Sorry for the slightly late start. We a little technology issue this morning. Okay, let's get going. Um, yeah, U.S. stocks to on Friday's session really funded the week on another weak note. You can see there that the S&P really grinded to the lows of the session on another sell-off in U.S. indices to really close out what was a terrible week for stocks. We're down over 1% on the Nasdaq there. The S&P were down almost 1%. Obviously, the route's been led by the Nasdaq, the biotechnology shares, the social media stocks, all really kind of leading the way lower. We also got a little bit of a further sell-off there on Friday after we saw some of the big names like the J.P. Morgans that missed on the earnings front, and really had nothing good to kind of drive us forward. So just kept off of a really bearish week in equity markets, a really hard turn lower that kind of came out of nowhere. No real catalyst to really drive it, and now guys are kind of wondering, geez, is this going to be, is there more to come? And I think it really caught people across the globe quite flat-footed. All right, just to show you guys a quick chart on fund positioning by Deutsche Bank, talking about the sell-off and high-growth stocks and being exacerbated by the high exposure of hedge funds that have them. So, one of the things that we saw, that's been so interesting, and this is particularly shows it, is that the positioning of the funds and the hedge funds, and obviously a lot of these hedges are using significant leverage, and you can see the just the sell-off that we've seen on the back of it, in terms of how they're positioned, and it's really just weighed on how the market has unwound on the back of it. You continue to see the obviously the tech shares and things like that have been hit. And let's just have a look at a couple of the next things here. You can see here that how that's just flipped on its back, the asset class returns. We've really had an inverse correlation totally from 2013 to 2014, which has really been incredible. Like we said, we've been totally led by the information technology sector, biotech sector, and all of a sudden, out of nowhere, it's really just totally turned on its head. You've had things like Bitcoin that's been turned on its head, things like social media that's been turned on its head, biotech shares turned on its head, and they were just the leader a couple weeks ago. So I think it's incredible to kind of show the turn in that, and you can see the inverse correlation to last year's year. So I think going forward, and what I'm probably going to spend some time on this week is really is look on how if this sort of trend continues to play out, how it may affect us going forward. If we are going to continue to see an inverse year to 2013, the best way to play it kind of going into the second half of the year. So I'll get back to you a little bit more on that in the next few sessions. All right, Asian session really kind of quite benign. I mean, considering the sell-off again that we saw on Friday's session in the States, we haven't seen big follow-through on the back of the selling in the U.S. of late, and I don't know if it's specifically because it's maybe a bit of a shift out of out of developed markets, and maybe some of the emerging markets are holding up because of it, because you're starting to see that unwind that happened before, maybe the investment out of emerging markets and into developed, so now it's kind of moving back the other way. But bottom line is the rest of the world's equity markets continue to hold up pretty well. We did see a sell-off in some mining stocks there in Australia, but other than that, I mean, Asia was was very pretty flat. All right, today in corporate action, we've got an earnings front in the States. We've got the U.S. Citigroup. We'll look at that for about 2 o'clock. We had Glencore that sold a copper mine for $4 billion. So we'll have to watch Glencore this morning. I mean, I don't know any more about it than that, but I mean, I think these asset sales have been seen as quite positive as of late, so by these mining stocks. So the market will probably like that a little bit. And then we have Anglo American that's seeking a buyer for Rustenburg operations. They want to focus on more mechanized operations. A comment by Kadafani. So keep an eye on that one as well. All right. In terms of the key factors out today, almost nothing. We've got house price numbers out of the UK. We've got industrial production out of the ECB, and we've got retail sales in the States. In the week ahead, let's just have a look here. We've got Pick and Pay, we've got PSG, and then we've got SAB all with numbers. The SAB numbers are just a revenue update. The others are full year numbers. In the States, we've got Intel, J&J, and Coca-Cola. Then on Wednesday, we've got Billiton with a quarter 3 revenue update. We've got Bank of America, IBM, Google, and Yellen that's going to address the Economic Club of New York and the Fed's Beige Book. And then we've got quarter 1 Chinese GDP. So those numbers, there's a couple numbers there. On Wednesday, I think it'll be quite significant. On Thursday, we've got Goldman Sachs, General Electric, Schlumberger, Union Pacific, Philip Morris, and PepsiCo. So just to kind of give you guys an overview of what we're going to be looking at in the week ahead. All right, let's get into some maps. Okay. First thing that I wanted to have a look at is the sorry, I'm just waiting for the thing to load up. It's the S&P 500. The chart that I really wanted to look at here is a 2-year. Sorry. Here we go. All right, so we're going to look at a 2-year on the S&P, and let's shorten this up just a touch so we can get a better look at it. There's 2 things I want to look at. One is trend support on the S&P over a 2-year, and see how that lines up with horizontal support. And it looks almost perfect. So if we shorten this up a little bit so that you can see a little bit more of the horizontal support. I mean, this was a big level when we broke out above lateral support and at around the 1810 level. And you can see here how the trend support on the S&P really comes in perfectly to sort of line up with that. So that's kind of the next level that I would look at to be a major level in the S&P. After that, I mean, things are gonna. I think things can get quite dicey. So we're gonna look at that one. In the next day or two, and I would expect us to test it at some point today in the States. Unless we just start to turn around before we even open, I would expect us to test it. And then from there, we'll have to see how it plays out. But 1810, definitely some sort of support on the S&P. All right, next one we're going to look at here is the same thing, a 2-year on the FTSE. I think we did look at this chart the other day. What did I do? We looked at this chart the other day. Sorry, let me just get this looking better. There we go. And we talked about, this long sort of ascending triangle pattern that we're in. Basically, we're right at support. I mean, as you can see there, we're more or less perfectly at support. Any way you draw it, if you draw it from wicks or if you draw it from closes. But in terms of a closing basis, I think we just dead at support. Obviously, we're going to get a lower opening out of the FTSE here, but we're going to look for how we're going to close today. So, how we close today is going to make a big difference to whether or not we actually hold support today in the FTSE, and I think this is significant. S&P's coming up on trend support. FTSE's right at trend support. All of these charts kind of, and these are trend lines that are going back for a few years here now. So, watch us on the FTSE today. If we can trade well and kind of hold a flat line, I think it's really significant. If not, then we start to push a little bit lower. This could be bearish. I mean, bearish things for the other indexes globally. All right, let's look at MTN. emptying this thing. I mean, just the other day, it looked like it was gonna break down. What I wanted to show here, let me just zoom it in a little bit more, is simply that we made a new all-time closing high here. Let's see. I don't know why I just did that. Okay, so you can see here, this is a previous closing high. The top of the green bar here, I think on the 24th of last month, was at 218. I mean, we closed at 219. We did close up in the auction on Friday along with half the other stocks in the index. But bottom line is we did close up. 220 is definitely what the top end of any of the ranges have been. You can see there 1, 2, 3, 4, 5 touches at $220. So 220 is going to be what I think we're going to have to pay the most attention to. If we get above 220, even on an intraday basis, because it hasn't been above 220 on an intraday basis, then this thing could have a little bit of legs. So I think we got to watch that level really, really closely. If we fail again off of 220 and then start to make another reverse off of it, then then I would say that it's a more significant failure, because we kind of tried the downside for at least after touching it several times before we actually came down. Right. Amplats. I just want to have a look at Amplats, and we've really been making the same sort of pattern over and over in Amplats, and it kind of gets a little bit smaller and smaller. But you can see there's little narrowing wedge or little triangles that are moving out to the right, and then we pop up above the pattern, and we seem to be doing the exact same thing again. Same thing in a bit of a smaller fashion as always. And yeah, like I said, it looks these things, these platinum stocks traded incredibly well on Friday, especially considering the the pressure that the market was under. And I don't see any reason why this thing doesn't break up through $500 over the next couple sessions, especially given the kind of way we've been pushing higher. I do think that this thing's starting to look a little bit tired, but either way, I think that we probably got a higher upside target here in Amplats, and just doesn't seem like it can fall. All right, AngloGold. AngloGold kind of looks like it's putting in a little bit of a head and shoulder pattern here. You can see here on the left shoulder, the right shoulder potentially, and the head here. It's not the most clean-cut thing you've ever seen. Just wanted to throw it out there. Really kind of looking like the neckline's there closer to 180, but definitely looking a bit head and shoulderish. So watch this one closely. If we do fall below 180 in AngloGold, I think could be a great place to maybe look to enter a short. And the last one I'm going to show is Sanlam. This one's very, very controlled by one of the local prop traders here. Pretty much dominates the space, and there's major support here at 54. I know he'll be watching this closely today. He's a big trader and only trades in size. This guy up around 54. There's major support. You can see that we bounced at 54. On Friday session, and made a little bit of a push off of it again. I kind of expect this to be tested again, but this is definitely a major level. If we drop 54, then I think it can really correct quite a bit more. But we built for a long time here. This is going all the way back to October. It took us all the way to the end of March to break out. So there was a hell of a lot of consolidation up here to 54, a lot of tests. So this is a big level, and I would expect us to actually hold this unless things start to really get hairy here locally, just because they've made a nice base to push off of potentially here for Sanlam. That's it for today, guys. Thanks a lot. Yeah.